Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 29th of January. There was a risk rally yesterday. We saw a pretty big rally rebound on equities, S&P 500, 1% higher. That's now filled that gap, not closed it, but filled the gap that had as the sell-off gap from Monday. And sort of question marks as to whether this is the rebound or not. I think it's still up in the air. I think you've, so just have a look, I mean, you've still got elevated risk, volatility, I should say. And you've also got some uncertain moves on bond yields today. That rebound yesterday on the Treasury yields has just sort of fallen over again a little bit today. The Chinese yuan sort of hovering around that 696 area. What else was there? The dollar. Interesting that the dollar continues to move higher. That dollar move higher was driven more yesterday by the positive US data. We saw really decent numbers coming out from the consumer confidence, but also the Richmond Fed rose sharply. The regional Fed survey rose sharply, which really helped the dollar into the afternoon. And it was interesting that dollar strengthening data is coming out just ahead of the Fed meeting today, which is going to be the big focus this afternoon. The Fed meeting is tonight, not expecting any rate cuts. The expectation is that the rate will be held at 1.5 to 1.75. But it'll be interesting to see what the committee does with regards to the balance sheet. The balance sheet has expanded quite significantly in the last few months, and that expansion has helped to drive risk appetite, certainly through equity markets anyway. And it'll be very interesting to see what the Fed says about that. But generally speaking, that Fed policy meeting at 7 o'clock tonight, UK time, is not really expecting any too significant surprises. We've got in front of that, we've got the pending home sales for the States at 3 o'clock, expected to improve by 0.5% in December, up from, continuing the 1.2% improvement in November. We've also got the weekly crude stocks, expecting an inventory build of 0.5 million barrels. You don't often get builds at the moment. So that would be interesting to see what the market reaction will be there. But certainly in the last few weeks, there's been sort of there or thereabouts around the zero line quite often. So yeah, a small inventory build's unlikely to do a great deal. But you have seen, if I show you, you have seen a recovery in the oil price in the last session or so. Is this a sustainable turnaround? I think it's far too early to say that, but it is certainly stemming the tide of selling pressure through the oil price, which is encouraging. Right, so that takes me on to my chart of the day, which is Aussie yen. Aussie yen we always take as a gauge of risk appetite, and that gauge of risk appetite, as I said yesterday, risk seemed to be positive, so we saw Aussie yen climbing. However, been a bit of a turnaround again today, just losing some of those gains. Now, if I zoom out, you can see that Aussie yen had been tracking this uptrend, higher lows, higher highs throughout the past 4 or 5 months, but that got broken on Monday and also broke below the reaction low at 73.85 of December and January. That breakdown below 73.85. On the flip side of that, 73.30, that key support around the pivot line, also came in, 73.30 as the low. So there is sort of a couple of levels that are really important on both the resistance and the support side now. So closing back above 73.85 helps to improve the market again. But look at these momentum indicators. RSI 31, that is the lowest level it's been since August. Stochastics and MACD lines also turning bearish as well. So this breakdown really is a key moment. Unless the bulls can really quickly get back above, I would say, this pivot line at 74.50, I would say that this is a market that is coming under increasing pressure. You're also below the 89-day moving average, which had been a basis of support throughout November, December, January. decisively below there now. So you're into this resistance band. This old support of 73.85 to 74.50 is now a basis of resistance. You've also got the underside of that old trend as well, old uptrend at 74.25 today. So the bulls have got their work cut out in order to really improve the outlook once again, but 73.30 are close below that, and you really are turning corrective, and you're sort of opening the 71.75 area as the next basis of support. But it is an important moment, I think, for the Aussie yen. A little bit of an improvement in the outlook early morning today, with the RSI back above 60, but on the hourly, but failed quickly, and MACD lines crossing lower doesn't look great. So key moment, certainly it looks like on Aussie yen. Can risk appetite improve sustainably? Well, according to Aussie yen, that little bit of a rebound doesn't look as though it's the case. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.